Hello, my name is Randy Wostratzky with the Spectrum Group. Thank you so very much for joining us today as we read out the latest data from Spectrum's Investor Confidence Indices from October of 2019. After my colleague, Kent McDill, gets done presenting the findings from last month, I'll review some of our recently published data based on research that we've completed with high-income millennial participants in defined contribution plans. Kent?
Thank you, Randy. Last month, recession fears drove investor confidence numbers into a deep dive. But the inverted Treasury note yield curve did not result in an actual recession. And in September, the three major stock market indices all remained high. In fact, in the middle of the month of September, the S&P 500 did reach its all-time high closing number, while the Dow Jones and NASDAQ sat close enough to their own records that stock market observers kept a close eye on the midday numbers to see if records were actually going to be set. Because of that stock market level, and despite the political upheaval over a series of phone calls between President Donald Trump and the President of Ukraine, investors decided to believe the stock market numbers. After falling into negative territory for the first time in 3.5 years, the SMICI pulled up from -2 to 4, which is still the third lowest rating in 2019. The SAICI rose 5 points from -7 to -2, but remained in negative territory for the third straight month and for the fourth time in the last 5 months. The SAICI spent 3 months in negative territory, also from November 2018 to January 2019. The top portion of this slide shows just how deep the dive was in August and indicates the climb back up that occurred in September. Note the blue line, which indicates the SMICI, that the September rating of 4 remains below the rating the millionaires offered in the 5 months from February through July. The orange line, which represents the SAICI, is having difficulty staying in positive territory as it's been in negative range for 4 of the last 5 months. The bottom chart shows the complete history of the Spectrum Investor Confidence Indices dating back to 2004. There's been a slight downturn over the past 2 years, but the indices remain as high as they were prior to the Great Recession. Looking at the individual components used to create the Spectrum Investor Confidence Indices ratings, there was an increase in stocks and stock mutual funds and a corresponding decrease in cash investing for the month. There was a slight decrease in interest in bond and bond mutual fund investing as well. Comparing the current numbers, you can see the green bars in each component. You can see that the current investing interests are closer to the all-time highs than they are to the all-time lows. Investor confidence is volatile these days and remains higher than when the Great Recession hit, and are actually near the levels the indices reported before the Great Recession. The Spectrum Household Outlook is a measure of how investors feel about the future regarding 4 components of their household finances. In September, the overall outlook nearly doubled from the August reporting, going from 8.0 to 14.5. As with the confidence index, the outlook is still below the ratings that came in from February to July, and they are identical to the rating in December, during which the Dow Jones lost 4,000 points in about 3 weeks, and the first call out about the inverse Treasury note yield curve was sounded. This chart shows that all the 4 components of the outlook saw an improvement in September, most notably the outlook for the economy, which is always the most volatile component in the outlook. The outlook still sits in negative territory at 12.40. That's the outlook for the economy. And when looking at the outlook by investor segmentation, the only segment that rated the outlook for the economy positively was those investors who vote Republican. The economy rating is likely to remain in negative territory as long as the trade negotiations between the United States and China remain a hot topic. It was the tariff talk that occurred early this year that set the economy numbers so much lower. More details about the Spectrum indices and outlook are available upon request. Now I will turn this conversation over to Randy, who will discuss our upcoming study, High Income Millennial DC Participants.
Kent, thank you very much. This research is a little bit different than other Spectrum publications you may or may not be used to. Normally, as a qualifier for a respondent to be able to participate in our research, they have to have a specific net worth, not including their primary residence. For this particular research, we focused on millennials with minimum annual incomes of $100,000 for a single millennial and $150,000 for those who are married or have a partner. Again, this is a little bit different than our standard methodology where we use net worth, not including primary residence, as the qualifier. We asked these millennials what factors contributed to retaining their assets, and as you can see here, hard work is far and away the most highly significant factor relative to the money that millennials are able to maintain. Because this is high-income millennials, most have high-paying jobs between either themselves or themselves with their spouse, and therefore, seeing as it's still quite early in their careers, you can see why it's such a huge factor that contributed to obtaining their assets and their current financial situation. You also have a significant amount of this population who have received their college degrees and then even gone on to additional higher education. So that's why you see education there at over 50%. When we asked about whether or not these high-income millennial investors expect to have sufficient income to comfortably live during their retirement, you did have over 3/4 of the total say that that is what they expect. But as you can see here, there's a significant discrepancy between males and females, with females saying that at 90% that they expect to have sufficient income, and less than 2/3 of the male respondents there. Also quite surprising, you see the lowest plan balance at those who have less than $10,000 saved currently in their qualified defined contribution plan, that all fully expect to have sufficient income to live comfortably during their retirement years. We asked a question about personal financial concerns, and on a 5-point scale, whether or not these wealthy millennials agreed with the different concerns that we laid out. Please note that these are not mutually exclusive. The respondents were able to select multiple options here that are concerns on that 5-point scale, with the first being the financing the education of their children. As I previously mentioned, this group, the higher income millennials, a very strong majority at over 90% did at least obtain a college degree, and because of that see the value that it's provided for them. And so financing that education of their children is very important. Also because of the fact that many of these millennials had to take out school loans in order to achieve that degree of education. They want to be able to help their children as much as they possibly can. Other things that were of highly cited, you can see there with on the middle left hand of the page, the responsibility for aging parents. At over 50% said that was a significant concern. And then you also had financing the financial situation of my children or my grandchildren at 48%. That was a significant concern. We asked about texting with the financial provider and whether or not this is something that these wealthy millennials had an interest in. And you can see that we had, and this was on a 100-point scale, over 50% of all of the different demographics, it was over 50 for all the different demographics, except those with the highest plan balances there that you can see at the bottom of the screen. But when we looked at the millennials on a male-female comparison, unlike the income question and whether or not they expected to have significant income to live comfortably during retirement, where there is a large discrepancy here, it is very, very close, with the males at 56.13 and females at 57.91, who say that they would like to communicate with their financial provider via text. Just a reminder that you can access data like this through our Wealthy Investor series, covering a wide variety of topics and allowing you to drill down in various demographic segmentations with our new visual analytics technology via our Wealthy Investor series. We have finalized our 2020 research topics, so if there's an interest in learning more about our Wealthy Investor series and our other in-depth reports, please do not hesitate to reach out to me or somebody else here at Spectrum, and we'll be happy to get you more information. Once again, this is Randy Wostratzky and Kent McDill with the Spectrum Group. Thank you so much for watching. Have a great day.